Right guys, welcome back. Today we're just going to break down Euro USD, basically see what I'm looking for the rest of the week, see where I think Euro USD is heading. Hopefully we can get some kind of clear analysis going, and then yeah, get some areas that we're watching. So yeah, we'll catch you in a minute. Right guys, welcome back. So Euro USD, blank chart. Let's see what we can do. Yeah, let's go for it. Right, so we're in the weekly. Let's go big. Right, so obviously we don't need to look too much over there, but this is the latest swing from that point to there, and as you can see, we've actually tapped into this discount area. So we'd be looking for sales obviously around this point, and it did. It dropped off. I actually did get an entry a while ago, obviously 7-8 weeks ago or whatever it was. I actually got an entry near the top. Should have left it on. Shoulda, woulda, coulda. But yeah, anyway, so yeah, we know that we kind of what we're hoping for this is obviously roughly we want to kind of get down here, and then we'll either start to break new highs or we'll break the lows. So we always got to look at the higher time frame narrative, and just roughly gauge if we've tapped every area. Obviously, there's a little bit of imbalance between this wick and this wick, so that's a little bit of an area that we might end up taking out higher. And obviously, there is little bits of imbalance, and there's quite a big piece here until the extreme. But the market might want to sell off and get some more power, some more buy power down kind of here somewhere, and then start making high highs. But obviously the weekly, we're day traders, as I imagine most of you are who are watching this video. We kind of want quick moves on like the 15 minute, the 4 hour. So we just need a higher time frame kind of narrative. So let's jump out of that. Let's go on the daily. So right. So daily areas we've got. So we've got a break there. We've got a break there. And we've actually broke the low. No, well, bloody hell, tiny bit. So personally, I'd be looking for that, because that's too close to be a sweep. I'd be looking for maybe this week we might tap below this, and then we might start going up there. Obviously it's all going to be might, it's all ifs, buts and coconuts, but we've just got to look for our lower time confirmation before we do anything. But like I said, higher time frame narrative. So at the minute, that's the swing high, and the swing low currently at the minute is here, but obviously we reckon it's going to take this low out. This low will then become inducement. So, right. Ignore my facial twitches as well, guys. I stress a lot, and for some reason I do these horrible twitches. But yeah. So that's inducement. So we're looking at obviously maybe tapping in. So all this is quite clean. There's no imbalance here on the daily. It's all we've tapped, we've broke structure there, we've tapped into this demand here, we've broke it, we've tapped in demand, but obviously we've had an early kind of buyers here pulling in now. So I reckon we might just take them out probably Monday/Tuesday this week, which will be the 18th and the 19th of September, and then possibly the end of the week start making higher highs for the next kind of few weeks. So what we could do actually, so it's a nuisance, keep doing zooming out, but yeah, let's have a look on the 4 hour to see what we've kind of got here. So we've tapped, that's tapped in, it's all really clean price action. We've actually not got any imbalance. So the last candle actually was this area. That was the last kind of dodgy price action, and that's that demand area has actually held, and that broke the new high. But we are so close to, in fact, I think we have broke it by a tiny bit. So I think we're going to clear it a bit more though, because some people will have stop losses under that low, and their stop losses aren't going to be massive. I mean, what, the average stop loss might be 10 pips. I mean, yeah, look at the size of that. That's where their stop loss might be. So, and we've not broken that yet. So, like I say, I'm kind of aiming for something like this, because if you see on a lot of time frames, inducement, basically it's just an area to form liquidity. So I'll be looking at something like that. Take the lows out. Plus you'll let me get rid of this line. So over here you're going to have people with double bottoms buying. So you got them. Then you got breakout traders. So if it shoots through, that will trigger them. So they'll go down there. So basically we want to take out these people, then take out these people, and then start making higher highs, higher lows. So that's basically how your liquidity works. Wherever you think there's a lot of money, wherever you think there's a lot of entries, there's a lot of entries and there's a lot of money. So we want to be taking them out. We want to learn to take them out. So there's almost a double, sorry, not a double top, a double bottom. Looks like a double bottom to a lot of retail traders, and they'll be buying now. They would have actually bought on Friday morning. They would have bought. I got a little buy in it. I managed to get a couple of % from a buy, but it's too risky because it's basically a double bottom. It's very close to being level. It's too risky for me. I'd like to see this low broke before I look at buys, really. Unless if this area starts to break before this, then I'll look at buys then. But obviously we've got to have a look. So let's have a look while we're on the 4 hour. We've got the 4 hour swings, and the swings are more important, guys, than just the odd retracement. All right. So you want to see where it's pulled back quite a lot. So it's pulled back quite a lot at this point here. So the start there, the start of the pullback was there. We've tapped bang on 50%. Then you go from that area. Then you go from that area to where it pulls back. We had a bit of a pullback there. And then we use this as inducement. So you can label it up, guys, and you can tell a bit of a story. So there's liquidity. That's liquidity. That's been swept a little bit there. So we've got this highest point, and it didn't start to pull back. There's little, as you can see down here. Well, let me stop this. So that goes there. We've retraced. We've then swept this high. It's all about sweeping money, basically, guys. Obviously, some swings are bigger than others. There's swings on every time frame. So you've got to kind of bear that in mind. But obviously, it's hard to remember it all. So this is your final high. We've not pulled back probably yet. So at the minute, it looks like that. But obviously, I reckon we're going to be dropping down to about here somewhere. And then we want to be aiming. So if we can get in, guys. So like I say, if we do like I said, we take out the lows. We then start making higher highs. We can then enter, hopefully on a 15-minute or a 1 minute. If our confirmation tells us to. So it'll be something like this. And then your first kind of TP should be the discount area, should be the 50% retracement, wherever this kind of ends, you know, wherever it starts to change tactic. So that should be your first kind of, maybe take 50% off the table. I know a lot of people take like 80% off the table, But I see it as a bit of a waste of, if you're going to leave 20% on the table, it's got to then go 5 times the amount of distance before you get what you've just took, kind of, or what you could have just then. So if you're thinking about it, you think it's shot up and you think, bloody hell, it's great, then I reckon just take it. Just take it, or take 50%, so you've paid yourself, and then leave 50% running. Running to your overall TP. And I mean, potentially, but you have to be careful. Sorry, because I'm obviously a prop firm trader, I have to be careful. Sometimes it can't last over the week, but then your equity and balance can't go lower than 5%, and all this. There's a lot of mixture, so try and get in and out within 1 to 2 days, and you want to kind of target no more than, or keeping safe, sorry, no less than 5%. So if your target is like 13R and it goes to like 11R or something, or whatever it's gone to, as long as you've kept your loss from where it is no more than 4 or 5%, depending on your prop firm rules, because some of them are 4%, 5%, and if it retraces while you still might be in profit, if it retraces on some of these firms, if it retraces more than your daily loss, even though you're in profit, it will cut your account and you'll breach it and you'll have to start again with more money, blah blah blah. So be careful of that, guys. So I'd be looking at, basically, as soon as this breaks, I'll look at the lower time frame, because I know what I'm expecting on the daily and the 4 hour. So if the 4 hour starts to shift, we will then drop down to the 15 minute and look for areas where it's broke and sweeps and the whole lot, liquidity, you name it. So I'd like to get in somewhere around about there, and then we'll have like a 5 target thereabouts. Or if it looks a bit choppy, then I might just take like 1 hour targets, or even half an hour, because half an hour on a big account can be 1,500, 2 grand, and you can do it in like 5 minutes, if not less. So yeah, so that's what we're looking at the minute, guys. So let's get rid of that. So yeah, there's your 4 hour. Let's jump a bit closer. I mean, your overall targets, if you are a swing trader, then all I would do is find your weekly kind of swing area, which is, I know we're on the 4 hour, the daily swing, but we're on the 4 hour now. So say that comes down to here, and we sweep this inducement, and then we start to retrace back, then you could aim to take partials at the 50% again, but know that we've got a lot of imbalance between this wick. We've got imbalance between there, and it doesn't want to let me draw it on. Come on. Right, anyway, we've got roughly imbalance there, so we can come into there and tack that, and we've got imbalance above, so you've got the potential to look something. You might look something like this. You might tap into this area, pull back a little bit, and then go higher into there, and we'll either break new highs, or we'll just start to sink. But like I say, guys, ifs, buts and coconuts. This is only my view on where I think it's gonna go. You don't have to obviously have the same bias, and I wouldn't expect you to have the same bias. But as long as you can kind of see how I mark my analysis up, you want to kind of, especially on a higher time frame, maybe mark where your imbalances are. So you got from this wick especially to this wick, nothing's touched that area for ages. You've got some imbalance here, which we may actually get some movement from. Oh, my face is going mental today. But yeah, but that's the higher time frame, guys. You don't want to overly, unless you're a swing trader. If you're a swing trader, you might not be interested in my work too much. But if you can get in at the start for a swing, and you can have like a 10 10, 20 pip stop loss on a swing, or even less, then your swing trade, you can get like ridiculous R, but there's a lot of emotion. And from experience, I've learned, and I've heard off other traders, that it's better to just be in and out the market and just take. So if you take 0.5% a day, say 0.5% or 1% a day, within half hour, an hour, you've got the rest of the day with no emotions. If you're a swing trader, then you're going to have weeks and weeks of emotions on one trade. And like, I stress enough as it is, hence the facial twitches and, you know, and the receding of the hairline. So I don't know. For me personally, I'd rather bank my profits smaller. Like, if I go for a 5R, that can be done within a day or two max. And if it's stressing me out, or I'm worrying too much, or I'm overcomplicating it, then if it's in profit, I'll take the profit. Take the blue. At the end of the day, guys, just take blue. That's all we want, is we just want to pay ourselves. So I'm kind of expecting, this is the 4 hour. So we'll take the low. We might sweep the low, then we'll create a new high, and then at this point, so as soon as this 4 hour breaks, the one that swept the bottom, which could be, if that doesn't happen, then ideally we could either look down to the 15-minute time frame and see what the swings are saying, not the trend as so much, the actual swing. So because obviously, let's go over here. Don't want to. So here's a trend. That's a trend, but that's not the swing trend. The swing trend is where it realigns with itself, and then it starts making lower lows again. And then we might realign again. And the story goes on. So in that respect, guys, you go from there to there, you check that it's took liquidity and it's pulled back. Then you've got there to there, same again, we've took liquidity, and then we're starting to pull back. But anyway, right, let's get rid of that. So yeah, guys, I won't waffle too much, but yeah, 4 hour we want to change ideally. If we think it's happening, or we wait till it's happened, and then we drop down to the 15-minute time frame, let it form a swing. As soon as that swing breaks, we then want to wait for it to pull back into discount areas, and then we can either jump on the 15-minute, stay on the 15-minute, sorry, or jump on the 1 minute for entries and get our stop loss relatively tight. Maybe not too tight, because you guys are learning, otherwise you wouldn't be watching this. I'm learning. I've done 3 years and I'm still kind of trying to learn and correct my skill, and you know, it always, like, my rules keep changing. My strategy's basically stayed the same, but I'm just tweaking my rules a bit. But either way, yeah. So 4 hour, we'd like to take the low, then start making higher highs. So maybe once it's took the low, we drop down to the 15-minute, let it create a bit of a swing, wait till it breaks the swing. Then we want it to come down to discount areas. And then we could almost drop down to the 1 minute then, let the 1 minute create a swing. I don't know what my finger was doing, but yeah. Let the 1 minute create a swing, and then as soon as that creates its swing, discount area, enter, maybe a 5, 10, 20 pip stop loss, and just go for a bit. Don't go mad, but just take profit. But yeah. Anyway, guys, no more waffling from me. If you can like and subscribe, it massively helps, and I'd love to know where you guys are trading from. Like, I'd love to know where my followers are from. So if you can drop a comment in the comment box, obviously below, then I'd appreciate it. And yeah, and I'll catch you guys on the next one.